It's been a volatile few days in the markets. We've had some credit data coming out that's not looking too hot. We have a lot of layoffs across the board. Some news from Gary Gensler surrounding staking and crypto. So there's a lot happening right now. We're going to touch on all of that today and more. Before we get going, please hit that like button. Subscribe to our channel. Nothing we say is financial advice. We're just two guys who love talking about the markets, and that's what we're going to be doing today. So do your own research before any sort of buying, selling, any of that good stuff. You can see the Lorax I got right behind me here. He says to do the same. Okay, got the Lorax here hanging out in the background. Kevin, how are we doing today?
I'm doing great. It's a beautiful, cloudy Tuesday. No, it's a Thursday. I don't even know what day of the week it is, but it's been a wild week, and most of that comes from today. It's we got some good data earlier in the week, but today just looks like crypto prices are taking a pretty good hit. I see some massive red candles across the board, but yeah, otherwise, still feeling pretty strong and excited to talk about some of the stuff that we saw over the week.
Okay, yeah, it has been a bloody afternoon ever since Gary Gensler announced that they were going after Kraken, one of the larger U.S.-based exchanges. And now, basically, I think it's a bit of an overreaction. You and I were talking before the show. I'm not a trader. I don't really try to swing trade, but this feels like one of those moments where, the price went down. People are overreacting a bit. So I don't hate the idea of trying to do a little trade at this point. Like we're at like 15.35, down almost $100 on ETH. Actually more than $100 on ETH. And I think that people are just overreacting to a piece of news that is not as big of a deal as we think.
Yeah, absolutely. Again, to me, it seems more like you'll have issues staking with exchanges, but actually using the protocols themselves, I don't really think they could necessarily come after you for that. But we'll see. Obviously, this is the first of its kind. The SEC isn't unfamiliar with going after people such as Ripple, I forget some of the other people that they recently went after. But yeah, the SEC definitely has been getting a little bit more aggressive, it seems like, in the past few months, in the past year, definitely. But I would say that this is definitely more of an overreaction. But again, long term, I still expect the market to come down. And like I was telling you, we've seen a lot of green lately, so a little bit of red isn't too unhealthy for the market when you see up only.
Yeah, for sure. I was riding high, man. We've been talking about Link and Matic for a long time. Link was up, 770 earlier, having a great day. Matic has been strong. They're still looking good. They pulled back a bit, but feeling good overall about those tokens. And hopefully, if they come down some more, I can just add to my position there.
Oh, they're coming down a lot more. Don't you worry. I sent out a tweet today. I was like, man, Matic's been trading in this bear flag for like over almost a year now. It'll be like a year in May. And I'm like, something's fishy. I don't care. This thing might be a great project. It might do extremely well, but something's got to give. But again, time will tell.
For sure. We also saw some more data come out yesterday around consumer credit. Once again, all-time high. We're closing in on $1 trillion. I had someone ask, what do you think hits first, the crypto market under $1 trillion or consumer debt over $1 trillion? I'm just like, man, I don't know. Like that's going to be a close one. Probably crypto under $1 trillion because it's just going to take one more leg down to do that. But we'll probably see U.S. consumer debt over $1 trillion here within the next couple of months. Yeah,
never underestimate the poor decisions of the retail. So that could potentially shoot up in 1 or 2 months, especially if there's like a really good President's Day sale at Value City. You might want to pick up some furniture using their American Express. So we'll see.
And you know what? That is a hell of a transition you just set us up for. Speaking of President's Day, let's talk about the State of the Union. I know you wanted to touch on that regarding what Biden said on Tuesday night, how you think that's going to impact things moving forward, not just on like the day-to-day, but big picture-wise. So why don't you get into that?
Yeah, so I did not watch the State of the Union. I haven't watched it probably since high school when I had AP Gov. But for the most part, I watched just the parts like when he was talking about the economy. And the main things that obviously Biden does, as he did last time when he talked about inflation coming down. He likes to cheerlead for how great the economy appears. And as every president, but this guy loves to do it too. And he's doing it probably in the worst possible time where it's just pretty deceptive when you see some of the data and then like things that we cover on the show all the time that paint a little bit different of a picture than what other people would think. So obviously he's talking to the majority of Americans who are middle class, maybe lower class, people who are working, 1 to 2 jobs, right? And him coming out and saying that he created 12 million jobs in the first 2 years of his presidency, when we have record inflation and the unemployment keeps coming down. If you don't understand how bad that is comparative to how we need unemployment to rise while inflation can come down, that's just going to cause another spike in inflation. So, I mean, cheering about that isn't necessarily a great thing to be talking about. That could be creating this false sense of, the economy, the market, everything's looking great. Maybe this is a great time to buy. Again, like we said last time, the market is not the economy. The economy is very different. It's a lot more complex than stock prices going up or down. But that was one thing that was really interesting to me. I think that's just a little bit misleading there. And the other thing that he mentioned was how he was talking about the need for higher wage jobs, again, for those who are not educated or do not have the college level of education. And again, higher wages when we're in an inflationary period, not necessarily the greatest thing to be, trying to champion. This is time to be a little bit more conservative, have more of a laid back tone. Sometimes saying less is even saying more. Do you know what I mean? Like that could save some face if you say less, but saying a little bit too much going into this, I think a lot of people might get the wrong idea of the state of the economy just by his word and maybe the market itself.
Oh, for sure. And I saw his, some of the favorability data of him over the weekend, and it was not looking very good. So by no means am I surprised that he said this. I'm hoping that people are realizing at this point not to really take anything he says at face value, just because the guy, it's what are we doing here? Like, what are we even doing at this point? I don't want to get too political on both sides. Like, what's happening? Like, it's just a constant. We need some grownups in the room, and not people who should be in a retirement home. So hopefully that can happen soon enough. I mean, listen, you got Pelosi out there still insider trading, like just clear as day, little concern for any consequences. So we're so screwed, but let's not go down that rabbit hole. let's plow ahead past that. I mentioned the consumer debt side of things. You had some information you wanted to share, so why don't you hit that real quick?
Yeah, consumer credit. We were looking at it. It came in at 11 billion as opposed to 25 billion, which was expected. And again, this is different from the level of credit card debt that is currently out there, which is the 930 billion. That was the one that was up 18.5%. That's the all-time high that we're currently sitting at. But the 11 billion versus the 25 billion, that's just pretty much consumer confidence in purchases that are making. So it came in so under, and a lot of people are speculating that this was a miss because a lot of people just don't have the faith to be making larger purchases right now. And if that's the case, then obviously a lot of companies that are producing some of these products and stuff like that are going to take a bit of a hit. And if they are constantly getting hit on earnings and stuff like that, they're probably going to lay people off. And if people get laid off, they'll probably buy the stock back. But again, that's just the cycle of the economics currently. If people aren't buying or they're spending too much, obviously it's going to have a trickle-down effect throughout the entire industry, the entire market, and the economy in any way possible. So seeing that level of confidence being so low in making those purchases definitely tells you that a lot of people are probably concerned or they're unable to make some of these purchases that they were probably doing for the past 2 years after COVID.
For sure. We can keep it just rolling on through. We've talked about the consumer credit and debt side of things so much that there's not much, else we can really say about it. Like, consumer is in a bad position right now, and a lot of them don't even realize it. And this debt is just going to keep going higher. I finally heard someone else say that they think we're going to see at least 2 more 25 basis point hikes. I think we're probably heading to 50 at some point. But, what you and I have been beating the drum for quite a while. So not going to say that Kevin and I are forward thinking and always right, but we are kind of forward thinking and always right. So all
you need to know is
we got that going for us.
The entire market sucks. That's all you need to know.
To give people a little bit of a glance into how the sausage is made around here, we have a joint document where we put show notes. And one day last week, I pull it up, and Kevin always puts in notes before I do. And there was one note in there, and all it says was, "This market is bullshit." So I was dying when I saw that, but we can move on past that. I don't know what's happening in your room there. It looked like a bit of like a poltergeist situation. Let's go into layoffs before we look at some of the charts, because it has been it's been a little bloody. We saw Disney is 7,000 jobs they're getting rid of. Yahoo is laying off 20% of their workforce, half of that being from the ads department. So people clearly aren't doing their job very well, or people just don't want to advertise on Yahoo anymore. Not shocking, but it's been interesting to say the least. It's unfortunate for those who are losing their jobs. I feel for them there. But we've kind of been expecting this is going to have to come at some point. Yeah,
absolutely. I think Disney is actually a really huge, when I came home yesterday, obviously I had a long day of work, and I got home and I saw that 5 hours prior, it was announced that Disney was going to be planning to fire 7,000 employees. Now, granted, 7,000 employees at the Disney Corporation, that's 3%, something like that. But regardless, Disney is not in the tech space. They're entertainment industry and obviously events and stuff like that. That's completely different from what we were seeing with, PayPal or not. Who else was it that was laying people off? There's tons of companies.
Everybody. When Meta did. Yeah. Amazon laid off a ton of people.
Exactly.
It's been happening all across the board.
Now we're starting to see it seep into other industries. I know 3M was manufacturing, and they're starting to lay off people. Zoom, and like you said, Yahoo today, which is technically it's tech, but and Boeing. Boeing is a huge one. They're planning to lay off a ton of human resource people, and also people who are working in accounting. So it's not necessarily just building planes and stuff like that. It's just everyone down the line. So it's seeping into other industries now. And it's still really early because we're not seeing massive numbers, but I think a lot of people are expecting this to get pretty bad. And the only way I see, maybe they're trying to be ahead of the inflationary spike, which again, I totally believe is coming based off of, the Fed's inability to raise rates fast enough, early enough. But I think that we're going to start seeing a lot more as the inflation data comes out, as, consumer credit continues to deteriorate. These unemployment numbers are going to continue throughout all industries. All job sectors, to a point where, obviously the dollar is going to be coming down. The DXY will probably be peaking and coming down on that. It's not looking great in the macro, but I think we're at the very beginning of this. And unfortunately, a lot of people are going to lose their jobs. And it's not just losing their jobs that's going to be an issue. They're going to have high credit rates. The Fed funds rate's probably going to go above 5.25, might go to 6, who knows. Then you got to pay for stuff, and then obviously if you're at your debt limit, it's a pretty crappy situation. So it's all the way down, trickle down economics, but this time everybody loses.
I just pulled up CME Group. They have, this has been very reliable for interest rate hikes. A week ago, they had it projected at 17%. That the rate was going to stay the same, 82% of 25 basis points. Today, 0% chance that the rate stays the same, 90% chance of 25 basis point, but 10% chance of 50. So I think there is a lot of growing concern that we are headed to 50. And if inflation comes in hot on Tuesday, oh, buddy, I don't trade. I hold for the long term. That's always served me well. But the stuff that's not in my long-term holdings, I just might move to cash ahead of Tuesday, because I don't think it's going to be a great number. I think Joe Biden is going to be eating his words. I think the market is going to see that number and start to have to price in at least one, if not two, 50 basis point hikes, and prepare for a longer period of raising, prepare for a longer period of staying at those elevated rates. And that I still think that that's going to be the capitulation event. And I just need to, if I think it, I just need to go ahead and bet on it. So that's going to be kind of the plan over the next couple of days, is get whatever I can into cash and just wait, because I think that we're about to see a big old red dildo heading on down.
Do you remember September of 2008? obviously I was super young, but do you remember like that entire week where the stock market was just going like haywire? Everyone was like, it was just massive.
Oh yeah, that was my final year of financial planning school. So like
right.
it was a wild time to be studying financial planning, and that was why only like 20% of the people I graduated with that spring had jobs coming out of college. So it was an absolute, and that's part of the reason why I didn't go into financial planning after that was A, it was hard to get a job, and B, I was just like, I went and shadowed some financial advisors like right around that time, and just everything that they were going through, I was just like, this does not look worth it to me. Like there's a few very, I've worked with people a lot, and there's some things that's great about it, but the idea of managing other people's money and how they respond to just like small movements and how panicked they get, I was just like, hard pass.
Yeah. But I mean, I really do remember that week just because of how chaotic it was. And I remember George Bush coming out on TV and like addressing the nation like on a Thursday night or something like that. And that's what I kind of expect. Like it was expected, but it was also unexpected for a lot of people who weren't, watching the markets. A lot of people who are just everyday Americans. And I kind of expect something similar to that, where it's just like out of nowhere, the week it's just nonstop dropping. And it's like there is no bottom. But what I'm anticipating for next month, or the CPI data, is it's below expectations, but it's still coming down. And I expect March to be the one that's going to spike really bad. Again, I'm just being patient here. That's the way it plays out. But it'll be really interesting to see what the CPI comes back on Tuesday.
Yeah, that's going to be a big one. I mean, maybe I'm wrong. And if I'm wrong, like, I don't even know what to think at that point. Like, at some point, things are going to turn. I don't know exactly when and what is going to lead to that. If it just needs to be, another big capitulation and then we start to see numbers improve, I'll start to believe that, we've seen bottom. But who knows? Like, maybe we get a couple good CPI prints in a row. Like, maybe the Fed had, like, you always have to leave open the possibility that you're wrong, right? Like, you can't get too married to any one thesis. You always have to be questioning that. And I think that what we see over these, this next CPI print, over the next jobs report, will play into that for sure. But just something to keep in mind too. Like, I'm just kind of talking out loud here of like, okay, I think this is going to happen, but I have to be open to the fact that I could be wrong about it. But yeah, anyway, we'll see. Let's move into the charts now.
Absolutely. I'm going to pull up the DXY. Looks like it took a pretty decent hit today, which is kind of funny considering how everything's pretty much down today. But DXY, like I said last time, it was getting close to that overbought territory, that overvalued. And let's see, I'm pulling it up. Got it on your end? There we go.
There we go.
So this is the DXY on the daily. Like I said, in the stochastic RSI, we were coming up pretty high. Looks like we got rejected by the 50 EMA right here. Kind of building what I'm looking at is a parallel channel. And again, this is more of a bullish parallel channel than it would be a bear one. So let's just pull up parallel channel. Where are we? There we go. So what I'm seeing is something similar to like that. Obviously, it's going to trade there for a few days. We need the stochastic RSI to reset before I think we make the next move to the upside. But if we're looking at this, we're seeing some pretty good from this bottom here. Let's see. From the bottom here where we were at, that was about 100.82. Now let's go from there to where we hit the top. It's about a 3.1% raise, about 3.124 points on the DXY. Pretty good. But again, we were at 114, 115 at one point. So let's go to the weekly, and we see that the weekly looks like it's climbing, which is good. I mean, obviously the stochastic RSI is still very low. It's the one thing that's weird to me is that the markets kind of are tanking today, and maybe not a huge amount, but they're down pretty good. Like a little bit less than a percentage in the traditional markets, and then for crypto, we're down like about 5%. Some coins, altcoins, obviously a little bit more, but the DXY is currently down about 0.25%. Nothing crazy, but maybe it's a little bit of a reset. I do think that we do need to come back down a little bit, not necessarily to this level down here, but good amount, maybe around this level. We found some support right off that trend line there. And that's also this wick here, which is 102.528 or 582. Maybe we just consolidate, move this way. The stochastic RSI resets, make the next move to the upside. That'd be a nice break. And again, like I said, on the daily, we got this 50 moving average. This is going to move a lot faster than the 200. So if we do start seeing a breakout and we start moving up here, this 50 is going to cross this 200. It's your golden cross. That pretty much signifies that we're going to be making some pretty good, significant moves to the upside. And again, like I said last time, that we never went below the 200 EMA on the weekly, which pretty much means that the DXY, if you consider the bear market for other risk assets, then the DXY would be in its bull market, and there's still a little bit of room to go. If this gets below that, obviously we'd be probably seeing the end of the bear market would be the turning point. But right now, dollar still looks strong to me. Just needs to do a little bit of retracement, and I expect that to be going up over the next few weeks, months.
Okay. Before we move into BTC, pull up Tesla real quick and look at either the year to date or the 3 month on that. I just, go to like three. Yeah, that's fine.
Oh, she's beautiful. I love her. Look at that.
Or no, yeah. If you look here, let me show you mine. Let me screen share mine real quick.
There you go.
I don't have all the fun lines on there that you do, but if you look, I'm gonna set it to year to date. 1 second. Here we go. There we go. All right. Look at this thing.
Nice bottom.
If you got in on January 6th of this year, right now you are up over 100% in 5 weeks.
Not bad.
That seems like, really sustainable, and that it's going to head right back up to an all-time high, Kev.
You know what? I think it's going to go back in time. I think it's going back to 1996, and it's going to pick up a Nintendo $64 Tesla stock, because that's 100% where I think it's going. This is just 100% the biggest short squeeze after everyone was just shorting the hell out of Tesla. I mean, when Elon obviously acquired Twitter, and he wasn't focusing on Tesla nearly as much, everyone was just like, all right, Tesla's done for. It's in the shitter. So everyone was shorting, and everyone's shorting around that 111 area, which, again, that was a level that we did talk about. I said that'd probably be, support at that level. Bounced right off, shot up. Now it's getting a little ridiculous. All right, it's 207.
Dude, it was up 3% today, while everything else was everything on my watch on that portion of the watch list over there outside of Tesla and Nvidia was in the red today. And somehow Tesla was up 3%.
It's never going to stop going up. It's going straight to the moon with SpaceX. But no, I definitely think that this is again, Bed Bath & Beyond being up. Apparently they're not insolvent now too. Wild. I wonder what Pinterest is doing today. It's the same. It's an insane place in our market right now, and it's kind of funny if people are. I mean, obviously, if you made money in this, God bless you. Because it was a great opportunity to make some money if you were just getting in, thinking that this was the bull market. But none of this is sustainable. And the macro obviously paints that picture, but also the technicals. Nothing is healthy in what I'm seeing in the charts. So, for what that is,
there's so many ridiculous, like Roku. There's so many of these, COVID stocks that it did incredibly well, during the lockdown. And just seeing what they've done, and like some of them have kind of bounced back a little bit, but yeah, it's a wild time out there.
We like the stock.
We like the stock. All right, let's move into BTC.
Absolutely. Let me just pull up that here. Yeah, Bitcoin obviously taking a pretty good hit. This is 100% from the Kraken ordeal. Again, we were pretty overbought. Obviously, we're overbought. I mean, we were at. Let's get rid of this. We're up only for like 5 weeks there. So it's good to see, like I said, some red in the market. But the one thing I really want to show everybody, because this is pretty funny, if we look at the weekly, I'm not a fortune teller, but I can tell you one thing. This candle looks like this candle. This one looks like it's going to come down and meet this one. It looks like you're pretty much going the same way you did up, but backwards. So it's like climbing up the stairs backwards. And I think this is why we have to look at the macro. Obviously, this could be invalidated at any point, but when I look at that stochastic RSI and then I see the volumes just coming down, I'm just anticipating one nasty red candle that matches that big old green one that we got back on, what day was that? January 9th, that week. Yeah, so again, we got rejected off this 200 EMA and stochastic RSI on the weekly, overbought. I don't know if you're going to retest that. Again, I was eyeing 25K just because I know how liquidations happen, and obviously today we're selling $250 million worth of liquidations. And again, ETH, in the short term has been leading the pack. Bitcoin not too far behind. I think Bitcoin in the 24-hour has been the leader. But yeah, we're down about $1,000 right now in Bitcoin. But for today, I believe we were down at the lowest we hit like 21.7 or something like that today. So let's see where we were today, 23. So we went from 23,000 to 21.7. Pretty good move today. That's what, $1,400 that we saw. And again, is it an overreaction? Maybe. Is it a lot of people who are like, okay, at any point, this whole narrative that the bull market is here could absolutely collapse? I think that has a little bit to do with it. But yeah, I think that we're looking at this on the daily. Stochastic RSI is pretty oversold, so I wouldn't be surprised by a short squeeze here. Maybe we get a double top scenario, come back up to this 24, but we don't break above it. What else can we see? Oh yeah, let's look at the main thing. Let's go to the weekly, and let's look at this death cross, because I mean it's pretty much coming now that we know that the stochastic RSI is going down. The momentum is to the downside. We're seeing some red candles. That 50 moves faster than that 200. I always say that. So that 50 could be just coming right down. 200 could be still operating off of this candle here, this candle here, this candle here, and it's going to just slowly creep up to the upside. It comes down, get your death cross, and you get your capitulation event. When could that happen? I don't know, maybe March. And that's also part of the reason why I think that we might see hotter CPI data in March. Am I using astrology to figure this out? Maybe. I don't know. But at the end of the day, there just seems like there's a lot of stuff lining up for the next few months. We had a nice little pump before. It looks like we're going to come to the downside. And last time I said the pump lasted like 67, 70 days before we got to the top. And then it was 30 days before we dropped down 30%. This is back in July of 2018. So we're still within that 30-day range, and we're coming down. So I wouldn't be surprised if history somewhat mirrors itself and we kind of just play out that same scenario. Once we get down to that 30% level, we could trade sideways for a little bit. And then right then and there is where maybe market makers just drop everything on the market. Maybe retail just realizes, it ain't worth holding this Bitcoin I bought $10,000 ago. Got to get rid of it because obviously got to feed the kids. So it's a little bit of a risky time. Obviously, I think the market makers kind of played this perfectly, selling into the pump and then getting out of it, waiting to buy back lower. But yeah, that's what I'm seeing with Bitcoin. Obviously, I'm still super bearish, but I never underestimate the possibility of liquidations, and we could see a price push upwards. And again, like we said, with this Kraken news, probably going to get a little bit squeezed here.
You heard them, folks. It's going down. We're yelling timber. Watch out below, okay? We got Ace right here. Coinbase down 15%. That's suboptimal. In after hours, it's pretty flat, but yeah, down 981 on the day. Oof. Yeah, man, it's not great. And that's not a whole lot to say. So we talked about ApeCoin before, and like I had said, after this game ended that was being powered by ApeCoin, it's taken a nice leg down. And they released some more information about like the timeline of events here. And it looks like it's going to be a little while till ApeCoin sees a lot of use. So I think there could be a good buying opportunity in the coming weeks for it. I would say honestly in the coming months. Like, 'cause I don't think there's going to be a huge use for ApeCoin until at least mid-April to early May. So if it keeps going down, I have mine that's staking. Not on a centralized platform, thankfully, but I think there's an opportunity there to make a little bit of a trade because it's playing out just like we saw before this previous use case for it, and I think it's just people are just gonna keep doing the same thing over and over again because not a lot of people can learn from previous mistakes.
No, absolutely. Just looking at this chart right now, I wanted to pull it up. And again, I'm actually really excited because I remember when ApeCoin dropped, and that was just such a cool time. And we're coming up on a year of that. But we're obviously making lower highs the entire time, and maybe that's a bullish setup in the macro. But when I look here, and let's pull up a trend line, go from here to here. That's obviously lower high. However, from where is that? Here to here. Let's see what the value is. That's 100, 100, 100. So maybe it's just maybe not 100%, but obviously we can see that we aren't putting in a higher high, and the stochastic RSI is coming down, and it looks very overbought. And again, like you said, without use case and paired with the macro, there's probably a good chance this thing is coming down pretty strong. That support level, I think, where it would be coming down to is obviously is $2.61, which is that a steal comparative to where it is now? Absolutely. Again, we're not in a bull market either. We are in a bear market. So bull market projections could be way higher, obviously, once a lot of money enters the space. But this is a new coin, so I wouldn't be surprised if it goes below that. That would be new territory. We'd have to find where the market would actually have to find where there is support and resistance from there. But again, 261 is a level that I am looking at. You break that and it keeps going down. Obviously, it's going to have to find support at some level. But definitely think that this is going to be offering some pretty good discounted prices over the next few months. I agree with you 100% on that.
Yeah, I think that we'll see, it receives a lot of support from the Bored Ape Yacht Club community. So I do think that that's a positive. But like I said, it's going to be a little while until the sync is on and people really need it. So this is one where I wouldn't be afraid to keep an eye out on it. Me personally might be deploying a little bit of money into it as we get closer to when the next events are going to take place that require it. And so I think there's plenty of opportunity there if you're patient and you have a game plan.
Yeah, I mean, let's get back to these levels up here, JWeb. I mean, come on. Let's get back to this.
I don't listen. I don't want to talk about that. I don't want to talk about how much money I had in ApeCoin in those few days before everything went belly up. So we don't really need to go down. We don't need to take a stroll down that street, okay? But
all
I
I'm
think
saying
that
is,
about.
I was gonna say, whoever put their bid in to sell at $40.98, you are the smartest person that's ever lived.
That was the day that ApeCoin dropped. It went up to there for all of 30 seconds and then obviously sold off right after that. And then we saw a big run up in April and then a big sell off right after that. So yeah, the highest level it really stayed at was like $21. And that was for, a little bit of time. Like that was for more than 24 hours. And so if it could get back to that someday, boy, I sure would be happy, but I'm not banking on it. Right now for me, I'm just accumulating and holding on for dear life, but that is going to wrap it for today. As we mentioned earlier, look at this, Ethereum already back, moving back up a little bit. I called that one when it was at like 1535. I'm like, people are overreacting. This is going to start to trend back up a little bit. So anywho, that's going to do it for today. We'll be back on Monday as we get ready for the CPI print on Tuesday. I think it's going to be a hell of a week. We'll see how things close out tomorrow. Any final words, Kevin, before we dip?
Again, nothing's changed for me. I still see the macro being very bloody over the next few months. Again, that's also giving me a lot of peace. So I hope it brings you peace too, just knowing that, hey, this is what's probably going to happen. No need to stress or worry about price fluctuations. Just relax, enjoy life. Don't get too caught up in the charts. And, when the time's ready, eat the fear. Nothing to worry about.
I was going to end with a quote from Michael Burry. I went to his Twitter. Okay, here we go. So the quote of the day before he deleted it: "It's time memesters look up what a death spiral convertible is."
I saw that.
So
yeah.
We're gonna end on that note today. I think that's a jolly, very happy way to end the show. So once again, thank you for being here, everybody. Please hit that like button, subscribe to our channel. Whether or not you like us or you don't like us, pass us along to somebody. We really appreciate it. We'll be back, like I said, on Monday. Monday at 12:30 Central Time is our normal time there. So come on back, watch the replay, drop a comment, whatever you want to do. We're happy to help. For Kevin, for the team at FLOLiO, I am Jeremy. Have an awesome weekend, everybody. We'll see you on Monday.
Take care, everyone.